and other associated with the use of cryptocurrencies. In this context, CIBAFI and the ICT joined forces for the second time this year to fuel a discussion on the topic of cryptocurrencies. In today's webinar, we'll look at the emergence of cryptocurrencies in the last decade. What are the key impact on the financial ecosystem, as well as the role of multilateral development banks in creating a more trustworthy cryptocurrency ecosystem. It also aimed to discuss the issues concerning cryptocurrencies application in the Islamic financial industry, and what are the key opportunities and challenges its integration can bring for the development of the industry. Ladies and gentlemen, to start off the webinar, I have the pleasure to call upon Mr. Ayman Sijini, Chief Executive Officer of ICT, to deliver his welcoming address. Mr. Sijini, the cloud is yours.
Thank you very much. Bismillah ar-Rahman ar-Rahim. Wassalatu wassalam ala Sayyidina Muhammad. Ladies and gentlemen, it's a great pleasure and honor for me to be here with you today. It's always to be a pleasure of being a keynote speech of this important topic because cryptocurrencies and fintech and technologies and blockchains and artificial intelligence, that's reality of the future. And whatever the current world will look completely different, in my opinion. So cryptocurrency challenges and opportunities for the Islamic financial industry. And what an interesting topic for today's webinar. The topic has an ongoing debate, but in the very beginning, we should be very grateful to our Sharia principles that welcome innovations and subject to no violation, of course, of the Sharia principles. But beside the undoubtable challenges that the Sharia compliance will remain one of the biggest challenges to the cryptocurrencies. Equally, of course, it's important is to associate regulations, especially, of course, when thinking of tax policies, gambling, money laundering, terror and drug financing, and the black web, as they call it these days. But unfortunately, the speculative access of initial coin offering, the ICOs, across 2016 and 2017 have given cryptocurrencies a bad name. Many ICOs turned out to be a scam in which unproven ideas were tagged to a blockchain for a quick fundraising. However, to make this a success, we should work collectively towards creating a digital asset token with high value assets to anchor the value of the tokens. The subject there is no doubt has attracted the young generations more than expected. And this orientation reflects a trend very soon. We must act positively despite all the challenges. We should look for the opportunity side of the subject. Many people argued that benefits of the cryptocurrencies far outweigh the regulatory hardship and users' fraud. ICD is interested to drive by the objective of this financial inclusion. Blockchain-driven applications serve this purpose very well. And from the development perspective, ICD builds fintech platforms to offer blockchain-driven financial services to usual unbanked or unserved populations. ICD will continue exploring those Sharia compliance opportunities to further enhance its fintech blockchain-driven platform with various capital market instruments such as smart sukuk issuance, asset tokenization, and zakat and sadaqah collection for development purposes. Just yesterday, I had a very interesting conversation with a sugar factory, whereby the way how they have to buy the sugar and how they can put it in the inventory or how they can actually utilize it in the factory has all kinds of applications, for example, for that type of a commodity. So, and they chose to have a cryptocurrency to serve them in that sense. So there's lots of very interesting ideas that can be brought up and put on the table. But with that, I will conclude with my great hope for this webinar to highlight the latest of this important milestones of the financial industry. So I'm very thankful and grateful to be here and looking forward to listening to more. Wassalamu alaikum wa rahmatullahi wa barakatuh.
Thank you, Mr. Sijini. Ladies and gentlemen, please let us also welcome Dr. Abdulillah Bilatik, Secretary General of CIBAFI, to deliver his welcoming remarks. Dr. Bilatik, the cloud is yours.
Thank you, Mohammed. Bismillah ar-Rahman ar-Rahim, wa salatu wa salam ala Maulana Rasulillah wa ala alihi wa sahbihi ajma'een. Distinguished guests, Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh. Good morning, good evening, good afternoon to all of you, wherever you are on your time zones. I would like to welcome you to this webinar, which is the second joint webinar we are organizing with our colleagues and friends from the Islamic Corporation of the Development of the Private Sector. I would like first to thank all the speakers and participants for making the time to join us for this webinar, and of course thank my friend and our colleagues at ICD, Mr. Ayman, and colleagues at ICD for partnering with us in this webinar. As mentioned by Mr. Ayman, the cryptocurrencies, artificial intelligence, and all the disruptions that are happening are not only matters of discussion for the future, they are actually in our reality. So currently, this is happening. And we have seen for the last maybe 18 months since the start of the pandemic, many projects that were on the pipeline for implementation by financial institutions or Islamic banks that were in the pipeline for the next 3 to 5 years, they have been brought forward. This is in a way very pleasing to note that Islamic banks, that they have shown during this period ability to adapt. They have shown their resilience and their ability to implement digitalization in many parts of their operations, in particular for serving the customers and reaching out to the consumers and to the economy in general, to fuel the economy. So they have shown a very great flexibility and resilience and capacity to adapt to this new normal. So cryptocurrencies, of course, they are not new, but we have seen for the last few years, there is a surge in many of them, an increase in values, and a lot of discussions happening around this. And perhaps the most like turning point for all these discussions is the start of the big tech to also be involved on this or have plans to be involved on this. And we just have seen, I mean, from the 2 years ago with Facebook having plans of issuing its cryptocurrency. And they are just recently, last few days ago, launched the crypto wallets for this, and many other initiatives that are happening by other big tech companies. So the disruption is here, and it is going to stay, and there is no return back to normal as we knew it like 5 or 10 years ago. So it is then our role and duty to bring those discussions and to see how we can adapt and perhaps to be ahead of the discussions to it. And they can say for the last perhaps year and so, a very significant milestone again has been achieved is for the central bank's digital currency. Central bank to start be involved in this process, and we can say for now probably more than 50% of the central banks globally, they are either trying or having trials for central bank digital currencies or doing the research, very advanced research for this. So this, for sure, these various disruptions or new types of really currencies, if we can call it, will have an impact and having an impact and will transform the way the banking intermediation is going to be for the next few years and not far from now. So Islamic banks, as I said, from the surveys that we do, they favor this and they have shown some capacity to adapt. In our regular surveys that we do, we have seen that for the last 18 months, I mean, some of the most focused areas by Islamic banks are, of course, on mobile banking and mobile payments. There is also the open banking, which is another area which will have an impact. And all these these kind of new disruptions, they're actually related, and they move towards requiring the banks to be more agile and innovative. And having this on the background, so at CIBAFI level, we have established an innovation and technology working group that will be working on various issues related to this. I think one of them, probably the first we'll be looking is on, which is the backbone of the many crypto assets or cryptocurrencies, the blockchain, and how this will have implications for the operations, not only on crypto assets, but on many other points. Again, I will be happy to hear from all the scholars, from all the experts that will be sharing with us their views during this webinar. And I would like to thank you again for attending. Thanks to our speakers and to our partners from the ICD for partnering with us. We look forward to very fruitful discussions on this very important topic. Thank you.
Thank you, Dr. Bilafik. Ladies and gentlemen, we will now start the panel discussions. And to do that, may I call upon our colleague, Mr. Rashid Itai, Senior Research Analyst at CIBAFI, to start the first session and introduce our distinguished panelists. Brother Rashid, the cloud is yours.
Thank you so much, Brother Mohammed. Welcome to all the participants, and thank you for joining ICD-CIBAFI webinar on cryptocurrencies. My name is Rashid Itai, Senior Research Analyst at CIBAFI, and I'm pleased to moderate the 2 sessions of this webinar. Change is constant in life, and for many centuries, humans developed different methods and means for purchasing goods and services and conducting financial transactions and economical activities. The most commonly used type of money nowadays is fiat money or fiat currencies. These currencies are issued by government until technology evolved and give birth to a new form of currencies known as cryptocurrencies. Unlike fiat currencies, these digital forms of money powered by the blockchain technology are decentralized. Since the launch of Bitcoin, the first and the most famous crypto, many others were developed, and the crypto market gained a lot of attention from individuals, from organizations and authorities. Known to buy and sell all types of products and services, these crypto are also used as investment instruments where investors buy low and sell high. They are also enabling a completely new form of raising capital called initial coin offering or ICO. Cryptocurrencies are disruptive and they are challenging financial institutions and governments all over the world. Governments are trying to find the right regulation and without, of course, killing innovation, but at the same time protecting markets and individuals due to the significant criminal element like hacking and frauds. Such developments raised a number of questions and spotlighted many issues, like, for example, the driving forces for the development of the crypto market, the financial system response to cryptocurrencies, the regulation or regulatory actions that are taken in response to the surge of cryptocurrencies, and also the emergence of CBDCs or central bank digital currencies and their implications on the banking sector. To answer all these questions and to discuss these points, I will be joined by 3 experts in this first session. First is Ms. Sandra Rowe. She's an innovation and technology enthusiast and expert. She's the CEO of the Global Blockchain Business Council, a Swiss-based nonprofit consisting of over 270 institutional members and 130 ambassadors across 76 jurisdictions and disciplines. She's also an angel investor in emerging technologies and a board member and advisor for many organizations. She also participated as a keynote speaker in many international events and co-founded several startups and nonprofit and key blockchain industry network. Welcome, Ms. Ro. The second speaker is Dr. Abdullah Khamis. He is the principal and fintech expert in the Islamic Corporation for the Development of the Private Sector. He is responsible of leading and supervising several fintech and digital transformation projects. And he founded also several AI-based centers in the Kingdom of Saudi Arabia. And he holds a PhD in AI and data mining domain from the King Abdullah University of Science and Technology. He also published several papers and book chapters in top-ranked journals. The third speaker is Dr. Hilal Hussein. He's currently the lead knowledge solution specialist at the Islamic Development Bank Institute. He's responsible of leading the process of designing and structuring innovative knowledge-based solutions to answer economic development challenges facing IDB members countries. He also generates ideas for new and innovative Islamic fintech products and the instruments, and conceptualize and supervise the structuring and the design of cutting-edge tech products to serve Islamic finance. He also published a number of papers in international journals and conferences, and he has 5 patents in cryptography and crypto ecosystem space. Welcome to all the distinguished speakers. And I will kick off this discussion by addressing my first question to Ms. Sandra Rowe. Can you please elaborate us or give us more insight on the factors that are driving the growth of cryptocurrencies, with a focus on the technology that backs these innovative tools, and by that I mean blockchain?
Thank you very much, and greetings everyone, wherever you are in the world. I would like to thank CIBAFI and also ICD for the opportunity to speak today. I've been in the space for about 10 years, first as an early Bitcoin enthusiast, and then over time, having worked as the head of digitization at CME Group, we launched the Bitcoin index products and futures products. And now you may have heard, as of last week, there was a launch of the US-based regulated ProShares ETFs, which are using the CME futures as the underlying. So there's both fast innovation happening and slow innovation happening. So what do I mean by that? Focusing at a macro level on what we're seeing in the last decade, and particularly in the last couple of years on blockchain technology, if you look at it from an enterprise perspective, so meaning big corporations and some governments, you would actually think the progress is very slow, oftentimes because people are working on projects, and these are often very deep infrastructure level either replacements or alternatives. And when you're talking about the equivalent of replacing the pipes of foundations of your systems, these take many years to do. And so for those who are impatient, it may seem very slow. However, we are talking about replacement of infrastructure using blockchain technology, which can take potentially decades to do. And I think that's where some people may think, oh, there's not a lot going on in blockchain. It's not actually true. Based on the macro level discussions we have with corporates around the world, there are some substantially quiet, but yet deliberate alternatives happening with using blockchain technology to actually help replace certain systems that are frankly legacy and decades old and need replacement. And then on the flip side, you have greenfield opportunities where we are seeing countries or institutions that did not have a lot of existing legacy infrastructure. And you are seeing actually the adoption with a clean slate or white paper to be able to just start from scratch and adopt that new technology and leapfrog. Very much akin to those who had landlines versus mobile, and to be able to leapfrog is actually an advantage. And because the barriers of entry to actually adopt blockchain technology is that much easier these days, and often it does not require the multi-billions of dollars to actually implement the infrastructure, it is actually accessible to more and more smaller companies, countries, and those who have that greenfield opportunity. I think the most challenging is if you are an existing legacy infrastructure or financial institution and you have to find workarounds with your existing legacy infrastructure. And so I'll stop there for the moment. There is both fast and slow innovation going on if we focus on what is happening at the blockchain technology side of the world.
Thank you, Ms. Sandra. Now that we know that there is an innovation happening and cryptocurrencies are something that we cannot deny, of course, the financial system will respond to the importance of this trend. So I will bring forward Mr. or Dr. Hilal to talk about the response of the financial system, including the regulatory response to cryptocurrencies, with example from region, including the GCC, where we see that there is things happening in terms of cryptocurrency. Dr. Hilal, the cloud is yours.
بسم الله الرحمن الرحيم الصلاة والسلام على رسول الله السلام عليكم ورحمة الله وبركاته. Thank you very much first for CIBAFI and ICD for organizing this important event, and thank you for giving me the opportunity to give some insights in this important panel. The response to cryptocurrency have varied across a wide spectrum and over time, starting from the reaction that went from many leaders in finance, saying that cryptocurrencies like Bitcoin and the others and the like, the altcoins are a fraud, to the direction of finding a way to implement the underneath technology behind these cryptocurrencies, talking about blockchain itself. Many have argued that blockchain does to the finance what the internet did to the media industry. I think the convenience of digital payment is really winning out over cash, and this is already happening. And there are rich countries like Sweden, if you take, for example, where cash is barely used anymore. Likewise, in China and India, the use of cash is plunging very fast. Among common concerns for both financial institutions and regulatory bodies is to ensure that the money is not used for illegal purposes, and so transactions will be auditable and traceable. United States, for example, and in US, cryptocurrencies are considered assets, and you will only have to pay tax on the profit you make from trading in this market. Some countries are planning to introduce their national central bank digital currency that will replace the standard fiat model. China has already introduced their digital Topia coin, which is backed by official funding. This and if you look, for example, there are some countries that they're giving grace period where they allow some private currencies trading, but they want to liquidate this to support their their central bank digital currency. Looking at the region here, GCC, if we take an example of Dubai, only in May, this May, if they started with the Dubai airport free zone, where they signed an agreement to support the regulation, offering, and trading of crypto assets within the free zone. So I may stop here at this point. Just hopefully I answered the question about how things are moving with concern to the reaction and response of the financial sector and the regulatory bodies.
Thank you, Dr. Hilal, for this insightful intervention, and also for the different responses that you have highlighted from different regions. I will focus on one of the initiatives that you mentioned, and by that I mean the central bank digital currencies. We noticed that central banks are now intensely focused on CBDC, and in a recent survey of central banks by the BIS, they found that 86% were actively researching CBDCs, and 60% were experimenting with the technology, and 40% were deploying pilot projects. And there is a number of countries and examples from a number of countries like China. So to focus more on this point, I will ask Dr. Abdullah Khamis to highlight the global developments and the use cases of central bank digital currencies, because some of the people may not know exactly the importance of this initiative, and also what are the use cases of central bank digital currencies, and what are their implications on the financial sector and also the banking sector. The second point will be covered. I will ask this question to Ms. Rowe to elaborate on the implications on the banking sector. But first, with the use cases of CBDC, can you please elaborate more?
شكرا. بسم الله الرحمن الرحيم. الحمد لله رب العالمين والصلاة والسلام على أشرف الأنبياء والمرسلين سيدنا محمد وعلى آله وصحبه أجمعين. Thanks for giving me the chance to participate with this good people in the panel. Actually, just to give a quick background about the CBDCs, actually, we know that blockchain comes to solve a problem with the trust over the internet. Performing the financial transactions over the internet lead to some risk and the absence of the trust. So the third party, which is the financial institutions, existed over the internet, over the e-commerce to verify these financial transactions. This led to some problem and some costs of the existence of a third party to verify the financial transactions over the internet. The cryptocurrencies and the blockchain came to solve this problem, to solve the trust, and to produce like the cryptocurrencies to perform this financial transactions over the internet. But this again brought a problem, which is some crimes, some money laundering happened over the cryptocurrencies. So central banks at this stage decided to came into the market and presented the CBDCs, the central bank digital currencies, in order to produce the features of the cryptocurrencies while eliminate, or let's say mitigating the risk of the side effects of the cryptocurrencies, like the anti-money laundering and the crimes and all the related issues on the cryptocurrencies. So the idea was for the CBDCs to come and produce it. And you mentioned some good numbers of central banks who produce these cryptocurrencies. These CBDCs can be divided into two categories: the wholesale CBDCs and the retail CBDCs. The wholesale CBDCs can be used between the banks to do the interbank payments, and the retail CBDCs can be given to consumers and the citizens. Here, we may speak about some use cases that CBDCs can help. The first one is actually the programmable payment, or let's say the direct transfer or the direct benefit transfer. When central banks or the government, they would like to finance specific beneficiaries for a specific purpose programs, they can issue CBDCs that can be only dispersed in specific purposes. This will ensure that government-supported programs, once they issued by the CBDCs, will be used, the currencies or the CBDCs that will be given to the citizens will be used only for that purpose and for this specific purchase. This, I think, one of the great benefits and use cases for the CBDCs. Another use case is actually the cross-border remittances, and here we can solve the international remittances. The central banks usually manage everything within the geographical region of the country, but once we go to cross-border remittances, it's still an issue. But applying a blockchain on a private blockchain between the central banks using the CBDCs will help to make and faster cross-border remittances payment. This is a good use case that the CBDCs can use. A third one is actually the retail payments. The retail payments is the type of CBDCs that will be given to the citizens directly. This is a very important use case because the central banks now can issue a coins or digital currency that directly dispersed or given from the central banks to the citizens. Here, the citizens can use it in retail, either for value or, let's say, token utilization. And maybe we don't go go to details here. This helped to eliminate the third party, which is the banks, because the central bank now directly communicate with the citizens to give them the coins. And if any financial institution go into, let's say, bankruptcy or some problem, the central bank will not be affected and the citizens will not be affected as well. The fourth use case is actually the offline payments, the digital wallets that will be given to the citizens in areas where there is no coverage, the verification and the ensuring of the let's say the ID of the citizens can be still verified, and even the offline payment can be done in the retail payments. Last but not least, the use case is the micro and SME lending. This is one specific program that can be executed easily by the central banks with the help of the CBDCs, because now they can finance micro and small and medium organizations from the central bank and even from the banks using the digital currencies. And this also will maintain that all this financing can go for specific programs as per the smart contracts associated with the coins and as agreed in the MSME financing agreement. Thank you.
Thank you, Dr. Khamis. And I will focus on one of the use cases that you mentioned, the retail use case of CBDCs and the implication of such model on retail banks and the function of retail bank as we know it now. So, Ms. Sandra, can you elaborate more on the implications of CBDCs and also focusing on this business model of retail use of CBDCs?
Sure. Thank you very much for that. And Dr. Khamis' use cases were absolutely spot on about solving for real world problems. And that is the one challenge I have for all countries looking at CBDCs, which is what is the practical problem that you are solving? And is it actually better for your wholesale banking system or your citizens? And I'm going to answer your question by giving an example. Some of you may be very familiar with Project Bacon in Cambodia, which is National Bank of Cambodia Central Bank has launched a wallet in connection with a technical group called Suramitsu, where they were encouraging young people to get a digital wallet. And then their CBDC was to actually encourage banking, because most of the young demographic, which is about 60% or so of the population, are not banked. And interestingly enough, the CBDC was launched a year and a half ago or so to actually encourage banking, but in digital form, because most people have mobile phones. And so if you think about it, it's almost in reverse. They're actually launching and encouraging CBDC usage in order to get more young people banked, which is actually it's a system of not one or the other, meaning retail banks no longer are useful. It's more, how do we actually coexist and actually create a system where all parties have value? And I think that is something that is not discussed enough. There seems to be, at least in sometimes when I hear about cryptocurrencies and CBDC, it's an us versus them mentality. And really what we should be thinking about is the collaboration and where could the bridges be built to actually bring crypto and CBDC, anything digital, into the real world and solving real world problems. And so for those who are not familiar, please look into Project Bacon. It's a very interesting project and it is live.
Thank you so much, Ms. Sandra, for this useful information. And as you mentioned, whenever we talk about CBDCs, especially in the use case of retail, we think that CBDCs are a threat to retail banks, and thank you for clarifying that. The last point that I would like to cover in this first session before moving to Q&A is the role of multi-development banks in introducing and sponsoring a trustworthy cryptocurrency ecosystem. And I will ask this question to Dr. Khamis and Dr. Hussein, since they are both part of the IDB group. So if you can please elaborate more on the role of a multi-development bank in introducing and sponsoring a trustworthy cryptocurrency ecosystem for cryptocurrency development.
Thanks. Maybe I will start, and maybe Dr. Hilal can later on complete. Actually, the role of the MDBs is very important in the era of the cryptocurrencies. We can let's say highlight that the MDBs are very keen to achieve the global SDGs, and this SDGs is actually represent a huge part of the mandate now of the MDBs. So eliminating the poverty, creating jobs, all these things can be achieved using the cryptocurrencies. And the MDBs in the past, they suffered from multiple problems in financing the governments, in financing the financial institutions, and even financing the beneficiaries in the target countries. The MDBs in the era of the cryptocurrencies, they can effectively participate in enhancing and achieving a better SDGs through different forms. One of this is actually the financing programs that come from the MDBs can be issued in especially created, let's say, coins, maybe security tokens and utility tokens. Maybe we don't go in details here. This can be given from the MDBs to the central banks, and the central banks in this time will use this tokens to finance the SMEs and the benefits. Here, the MDBs can ensure that these tokens or these cryptocurrencies, once given to the central banks, they will be given directly to the specific programs and will be given to the direct citizens. One of the factors that will ensure that this thing will happen is the verification process that comes on the blockchain. So it ensures and make the MDBs to be able to trace the payment over the blockchain. And the second thing is the associated smart contract, because the smart contract here will ensure that this cryptocurrencies will go directly to the benefited organization and the central bank. Later on, the central bank can exchange this cryptocurrencies to fiat currencies through other cryptocurrencies, but this will be done on private blockchain. We heard about initiatives from IMF and from other organizations. Here, I think in the Islamic Development Bank Group and in ICD specifically, we started to look into some solutions to include cryptocurrencies and the digital currencies in several initiatives that will be used. Crowdfunding of renewable energy is one application that we started to look, and we use the digital coins and the utility tokens for this purpose. Another thing is the Halal blockchain program that we support the supply chain in our member countries. And this some of the initiatives that MDBs, I think, will ensure to have.
Thank you, Dr. Khamis. Dr. Hilal, if you have anything to add.
Yes, thank you very much, and thanks to Dr. Khamis for these very valuable comments. Actually, I just to add that I totally agree with what you mentioned, Dr. Khamis, and maybe the MDBs should it's time that they should work hand in hand to have the significant role and impact on a trustworthy cryptocurrency ecosystem. So we're not talking anymore about some cryptocurrencies. We're talking about a complete ecosystem in line just to achieve the SDGs goals mentioned by Dr. Khamis. In the ISDB, and more specifically in the ISDB Institute, we focus on, as our mandate, on leading the development of innovative fintech knowledge-based solutions in general to support the sustainable economic advancements of member countries and Muslim communities worldwide, guided by the principle of Islamic economics and finance. We are aiming to create an ecosystem from the family of our already existing products in our table under what we call the ISDB Institute Smart Economy Program, which aims to transform critical components, economic parts of the ISDB member countries using blockchain and AI technology for financing operations to bring in value-based, inclusive, and sustainable growth in in line with the Islamic economic and finance principles. As part of this Smart Economy Program initiative, ISDB Institute has developed an innovative fintech ecosystem, which calls a smart social currency, aiming to assist member countries in allocating public services through smart vouchers efficiently. This ecosystem capitalizes on integrated components such as, we've done like 3 patented solutions so far. These are quite innovative. One of them is smart voucher that help in the distribution of wealth for member countries. This is already a patented solution. We do have a smart credit management system, also another patented solution, and proof of use. This is a component in the architecture of the blockchain technology, whereby it's replacement of the current proof of work of Bitcoin and the like proof of different, access for other altcoins. So this proof of use is one of the patent solution as well. In addition, that currently we're working on a stabilization system. This will help in the central bank digital currency being stable in the member countries, and there are others coming in the queue as well. So we're looking at the complete ecosystem, and this should goes again. I see this having a much more value if member countries jointly put their efforts to make this ecosystem impactful globally. Yeah, that's it from my side. Thank you very much.
Thank you, Dr. Hilal. Thank you, Dr. Abdullah and Ms. Sandra for your intervention in this session and all the insights that you shared with us. And I'm sure that all the participants share with me the same view, that it was a very insightful session. I see that from the questions that we are receiving, and since we still have few minutes left, I will pick few questions that I think we were not clearly answered during or covered during the discussion. So there is one question here regarding the CBDC, especially retail CBDC and the use of blockchain. Do we need to talk about blockchain whenever we talk about retail CBDCs, or there is other form of distributed ledger technology that can be used to back the retail central bank digital currency? Perhaps I will ask this question to Ms. Sandra.
Sure. Just for clarity of definition for those who may not be as familiar, distributed ledger technologies do not all have to be a blockchain technology solution. Distributed ledger technologies have been around for a very long time. So the short answer is yes, you could have a DLT system that doesn't necessarily have a blockchain in it. But I think what most people need to think about when they're looking at the design of the underlying infrastructure is, what do I need to achieve from an output standpoint in terms of business requirements and then obviously regulatory and compliance requirements? And so that's a more complex discussion. It's not just simply, oh, we need blockchain or DLT. It's much more complicated than that. But I do acknowledge you don't necessarily have to have a blockchain solution for the underlying DLT infrastructure.
Thank you, Ms. Sandra. There is one question here addressed to Dr. Khamis. Dr. Khamis, can you please elaborate on offline payment aspect?
Yes, actually, the offline payment aspect is, like the CBDC solve the problem of like making financial inclusion for the direct citizens. But in some regions, in the off part of the country, maybe the internet will not be in like good, or maybe some areas where there is no coverage. So what if that central bank decided to make the CBDCs is maybe the most, let's say, acceptable method for retail payments. What will happen to citizens in such rural areas? Will they ask them to wait until we give them a strong internet connection? What if there is some stores or there is disruption or disconnection in the internet connection in a specific area, or those specific circumstances, or maybe some problems that come with the telecommunication or the internet provider? In this case, all the digital wallets and all the payment solutions should be resilient to such issues by allowing the offline payments to happen. This enable the digital wallets that support the CBDCs to accept the payments, the transfers between the wallets and the merchants and the citizens to be done even in the offline mode, and then to be later on settled and synchronized in the distributed ledger once there is let's say a resuming of the connection. There are some parameters that can be controlled here, like the limit on the amount that can be done offline, or the limit on the number of transactions, but definitely this will solve such cases.
Thank you, Dr. Khamis. There is another question here regarding the financial inclusion and how can central bank digital currency contribute to financial inclusion or solve this kind of social and financial problems. So if anyone from the speakers would like to answer this question.
Yeah, maybe I can answer, maybe others can add. Well, you know, financial institutions and the banks, they usually played a great role in financing citizens and financing even the micro and small and SMEs. Such banks need huge infrastructure, need huge investment. So they have to add their cost of financing to any financial, let's say, any finance transaction to the citizens. This led to actually huge, not say elevation in the cost of financing to the citizens and to the micro and SMEs, and consequently some micro and maybe individuals could not afford the fees that required by financial institutions. So in the past we found that some citizens and maybe some SMEs, they could not afford the cost of financing from the financial institutions, so they could not afford such loans. Now, using the CBDCs from the central banks, when there is no third party in some circumstances, not necessarily all the circumstances, I think no fees will be applied to a third party. So this helps financial inclusion. One more thing, the financial institutions, the banks and maybe other financial institutions have some strong requirements and verification process to call some eligible beneficiaries for such financing programs. Some criteria not applied on some citizens, on some SMEs, and banks have to ensure at the end of the day a profit and mitigate the risk of financing. So eliminating again these requirements and going directly from the central banks to the direct citizens will help by financial inclusion for beneficiaries who maybe previously were not fulfilled by the requirements of the financial institutions.
Thank you, Dr. Khamis. Perhaps, Dr. Hilal, you have something to add on this point?
Yes, thank you very much. I agree with Dr. Khamis' point. Now, maybe I can add that any digital transformation, any technology, starting from the telecom industry, all the way to the mobile payment, all of these will help in the financial inclusion, because we're trying to include as many people that were previously excluded from the financial industry to be able to do transactions. Now, definitely, central bank digital currency is not an exception. It's a well-regulated ecosystem, if I might say, that will definitely play a major role in this financial inclusion by having many people that are not able to open an account. They're not able to do many transactions because they don't have the requirements, or they cannot reach the banks to be able, you cannot have an ATM machine and like in the desert, it's in a very, like area where they cannot install this, this equipment, but mobile phone or any other tool internet can be there. So financial inclusion is started before central bank digital currency, but CBDC can serve a lot in this aspect.
I may add one more point on the topic. When we talk about financial inclusion, one thing that governments can do very well that sometimes private sector does not do as well is not only supporting and rolling out a product like a CBDC, but also the education and infrastructure that you need to support the extension of that to its citizens. And the education piece, I think sometimes gets lost when people talk about financial inclusion. People need to understand how to use the service, well as financial literacy, well as being offered the product.
Thank you, Ms. Sandra. There's another question here from one of the attendees. CBDC can be either account-based or token-based. If it is possible to clarify the relation between the mentioned types and the CBDC types, wholesale and retail. Perhaps Dr. Khamis.
Yeah, thank you very much. Actually, there are, central banks are keen at the same time to support financial institutions and to support as well the citizens. The two types of the CBDCs in the wholesale, it will be given to finance the financial institutions. The banks need, let's say, financing from the central banks. The wholesale is coins and tokens and cryptocurrencies given from the central bank to the financial institutions. So it will help the payments to be done and the interbank payments, the transfers and settlements between these banks. So and for sure within private blockchain between this bank. This will help actually to make to reduce the cost of verification and the cost of networking between this banks. So the wholesale is usually or mostly will be directed to the banks to be used in the payments or the interbank payments between the banks and or the financial institutions. But the retail CBDCs will be directly issues from the central banks or mostly issues from the central banks to the citizens and can be used directly by the citizens in their retail purchase or maybe in a specific programs that will be supported by the central banks.
Thank you so much. There is here an interesting question. I don't know if someone can briefly, because we still have like 4 minutes, someone can answer this question from the speakers. Can a government become a miner or a validator in cryptocurrency ecosystem for cryptocurrency regulation?
I'll take a stab at that. We have a live example in the works today, whatever your opinion might be, but El Salvador has made Bitcoin legal tender and has indicated that one of their thermal renewable facilities will be using volcano energy to mine Bitcoin. So I think that answers the question of whether a government can do it. The question is whether it's actually prudent for governments to be doing that or not.
Since we are talking about governments and regulation, with all the opportunities that cryptocurrency may offer to the financial sector, not having a clear regulation may have some implication on the efficient running of the ecosystem. So in your opinion, what is the role? What are the things that regulator must do in order to ensure that a clear regulation is issued without killing the innovation and also harming this ecosystem that exists now?
Sorry, if I may.
Sorry.
I think it's still we are in the phase of education. we need to make sure that that regulators are very well educated on the difference between the cryptocurrency itself and the technology itself, what the opportunities they can do with the technology. If you look at China now, they banned trading, but they're starting their own digital cryptocurrency, central bank digital currency. So things are changing, and maybe some countries are regulators are looking for some examples, proven examples, so that they can follow. But things are changing, and I think there's no other way by moving in this direction, in this digital transformation, whereby every country will have their own digital currency, crypto-based digital currency. So regulators now, I think they're trying to educate from each other. So there's a reverse linkage of learning from the experience of others. So at this stage, I think once we have some good, successful, model, maybe other countries will follow, and the thing will be rolled out easily and in a fastest, way. Not currently. It's like everybody is cautious because they want to see what would be the direct, impact and outcome of such a revolution. But I think it's only about the regulators. They need to investigate more. They need to do more experiments, like the things that we're seeing in the countries. They're trying to do like sort of sandboxes, try to test here and there to attract. If you look at Singapore, for example, they're trying to attract as many innovative solutions as possible, facilitating the patent process, and so they're trying to be like a hub for such a lot of innovative ideas. So this will ease the testing and the experiments, and they can be like have a much better view and assurance of the result, so they can move forward. So it's more about the experimental. Some educations, and I think, but things will move forward. There's no way around. I mean, there's no alternative way of keeping the current system.
Maybe to add to Dr. Hilal, actually, if you allow me for maybe half a minute, what you have mentioned is really very valuable, and maybe triggered in my mind that we now in this day we have over 13,000 cryptocurrencies traded in over 400 or even more exchange platform. In the past, a lot of, let's say, bad practices happened either intentionally or without intention from some entrepreneurs. Some also exchange platforms were hacked by some criminals. A lot of cryptocurrencies were stolen. Some cryptocurrencies actually were vague and were intentionally created to steal some money from people. So regulators at that time, they were keen to protect the citizens from such bad behaviors. In addition, entrepreneurs usually go to the easiest part for them. So a lot of the tokens that have been issued in the past over the blockchain were utility tokens, where the entrepreneurs used to issue utility tokens and they can directly gain money from citizens. So regulators, they start to redefine what's the difference between the security token and utility token, and they start to make more requirements and ask a lot of cryptocurrencies to become security tokens more than utility tokens. So this makes more requirements, especially for this that requires ownership in the organization that issue such. So regulators sometimes they interfere to ensure and to minimize the criminals or the bad practices that is happening while we are evolving in this era. Yeah.
Thank you so much, Dr. Abdullah. Ms. Sandra, do you want to add anything?
I think just education, I absolutely agree, is key. Regulators, we do know, are speaking to each other around the world. They need to share best practices, and we need to encourage that convening. And then further, regulators need to also up their game, meaning they need to innovate, they need to adopt blockchain technology in their internal systems, and that will also help them to be better regulators. So I think there's actually a lot of room, and RegTech is also an area where there's a lot of innovation going on.
Thank you so much. Thank you, Dr. Khamis. Thank you, Ms. Sandra. Thanks also to Dr. Hilal for all the shared insight and the expertise. And I believe this session was very insightful due to the interaction that I can see here in the Q&A section. There's a lot of questions that I did not ask because they are related to the topic of the second session, which we will start soon. Thank you so much. And without further ado, ladies and gentlemen, we will start in a few seconds the second session.
Thank you. Thank you.
Ladies and gentlemen, now and without further ado, we'll start the second session of this webinar. In this session, we will look at the topic of cryptocurrency from an Islamic finance perspective. Cryptocurrencies are an interesting topic for Islamic finance, especially from a Sharia perspective. There is a number of questions that we will be covering in this session, like, for example, what are the Sharia views on cryptocurrencies and the challenges in their adoption? Does cryptocurrencies hold any opportunities for Islamic finance? And also the benefits of introducing an asset-backed cryptocurrency ecosystem, as well as the tools or the solution that cryptocurrency could provide to overcome the sustainability concerns. So in this session, I will be joined by 4 experts, starting with Dr. Mohammed El-Ghari. He was the former professor of Islamic economics at the King Abdulaziz University in Saudi Arabia, and the former director of the Center for Research and Islamic Economics in the same university. He is also a member of different Sharia boards of esteemed institutions. Welcome, Dr. El-Ghari. The next speaker is Dr. Shakil Mohammed. He's the founder of RNS Solution, a software and research and development agency, and third-generation blockchain, Antalya, and the angel investor of Aero Seri and CTO to Cachero. He holds a PhD in information and telecommunication technology, cybersecurity engineering from Korea Advanced Institute of Science and Technology. He has more than 10 years of experience in cyber incident response and matters related to IT consultation and other field related to open networking. The third speaker is Mr. Mustafa Adil. He's the head of Islamic finance and data analytics at the London Stock Exchange Group. He is responsible for leading the Islamic finance and the Islamic markets business for the organization, providing knowledge solution and bespoke services to support the continued growth and the increasing depth of the Islamic finance industry. He's a chartered accountant from the Institute of Chartered Accountants of England and Wales, and hold a bachelor degree in mathematics from Imperial College in London. The third speaker is Mr. Shihan Kester. He is a blockchain enthusiast and investment advisor in crypto, with a strong background in engineering from Istanbul Cultural University. He is also considered one of the youngest CEO of a blockchain-based organization named Shays Holding. Welcome to all the distinguished speakers, and I will start or kick off the discussion by asking Dr. Mohammed El-Ghari to give us his views regarding the Sharia perspective on cryptocurrencies and also the challenges of their adoption. Dr. El-Ghari, the cloud is yours.
Thank you very much. 10 minutes, huh?
Yes.
Okay. Thank you very much, Mr. Chairman. Brothers and sisters, Assalamu alaikum wa rahmatullahi wa barakatuh. Let me begin by thanking the organizers for giving me this opportunity to address you today. In the next 10 minutes or so, I will speak about 3 things. Firstly, to show that cryptocurrencies are the logical, the obvious, and maybe the last lab in evolution of the medium of exchange. The second subject is Sharia position on cryptocurrencies, because I assume, or I claim that Sharia position on cryptocurrencies is well known for centuries, actually. And finally, some suggestions for Islamic banking to capitalize on the new wave. Now, during the life of the Prophet ﷺ, the medium of exchange was, like most of the world then, gold and silver coins. Barter was still very common. As early as the second Khalifa, Umar radiallahu anh, about a decade after the Prophet, discussion of monetary reform was afoot. The unprecedented growth in economic activities and the huge increase in the revenue of the state directed the attention to the need to grow quantity of money. Umar radiallahu anhu thought to ease the pressure on the limited quantity of gold and silver to issue currency out of camel hide. But his advisors warned that if he does so, then the camel will become an endangered species because it would be worth more as currency than meat. So he abandoned the idea. And in the 2nd century of Hijrah, the great scholar Malik ibn Anas, the Imam of the Maliki school, replied to questions about the Sharia position on medium of exchange, consisting of cow and camel hides. Would this be Sharia compliant? The question was. He replied that if such exists, then all the Sharia rules set for gold and silver coins will apply to this currency made of animal hide, because they are then the measure of value. And throughout the centuries, the conceptual meaning of money was very clear in the minds of Sharia scholars. This is summed up by Ibn Taymiyyah, who declared in the 7th century Hijrah that anything people accept as money takes all the Sharia rules of money, and anything people consider as dirham will take the Sharia rules of dirham. In other words, there is nothing unique about gold or silver or anything else. It is the peculiarity of being a measure of value. And I don't know of any dissent on this view by any of the leading classical Sharia scholars. The position of Sharia scholars does concur with the human experience. Whatever gains acceptance as money, it will play the role of money. Cryptocurrency is no exception. Gold and silver, of course, fulfilled their function as a medium of exchange exceptionally well. However, as more growth takes place and the rate of market exchange and trade increases, people were feeling the pressure of limited quantity of gold and silver available for monetary purposes. So they invented kinds of supportive money, coins made out of copper and nickel, which became at some point so widespread to be the mainstay in a market as a medium of exchange. But they remained, nevertheless, and were treated as only substitute to gold and silver coins. Then came the banknotes. Banknotes were initially issued as a substitute for holding gold and silver currency. Because of this, banknotes were issued with an undertaking from the issuer to exchange these banknotes to the real thing, to the gold and silver notes. Every banknote is supposedly covered by 1 silver pound or gold dollar ready for exchange and kept in the vaults of the issuer. Central banks, nevertheless, could not resist the temptation to issue more paper money than supported by the quantity of gold or silver in their vaults. Because it is impossible for all and everybody in the community holding a banknote to come at the same time asking for equivalent gold or silver coins, the fact that there is more paper than supported by bullion will never be discovered. Hence, such adventure turned out to be less risky and more profitable. But the real surprise came when central banks stopped exchanging banknotes for gold or silver. People were supposed to lose trust in banknotes. But the fact of the matter is nothing of that has happened. This is the birth of the fiat money, one that is rely only on the trust of the people. That was a very significant development, which resulted in efficiency and stability and more economic growth, because central banks have an ability now to manage liquidity, but they're no longer enslaved by how much gold or silver they are holding in their vaults. In the last 50 years, commercial banks then became major depository of all financial wealth of people, and also major players in the management of liquidity in the economy. Hence, more and more of monetary wealth became abstract, only numbers in the books of banks. Therefore, it is efficiency and stability. When they moved from wheat and cow hide to gold and silver, it is because the cowhide medium exchange has a high value in use. Hence, the quantity of money tied to non-monetary factors, inflation and recession, is related to weather in the environment more than a management of the monetary policy. Now, the purpose of this lengthy introduction is to show two things. Firstly, there is a logical path to the evolution and development of the medium of exchange, which makes predicting where the monetary system is going not very difficult task. Hence, we should not be surprised to find ourselves here today, and moving to crypto is only logical. Moving to crypto is only logical step forward. And the second point is whether people collectively accept as money, whatever people accept as money will be money, regardless of any other consideration. This is true in reality and coincides with what Sharia scholars define as money. Whether we are speaking about CBDC, which is a digital currency pegged to a traditional fiat money like US dollar, or we are talking about a true crypto like Bitcoin and the like. These are the future. There is no question about it. Whether we like it or not, we are moving to that area. But where are we now? Since the emergence of cryptocurrency, tens of conferences, workshops, seminars, public and private, were organized to reach a conclusion on whether Bitcoin and the like are halal or haram. But they are all in vain, only agitating the appetite for more arguments and further discussion, despite the fact that we know the Sharia position on medium of exchange for centuries. Therefore, the first order of business in my mind today is to just stop wasting time and join the rest of the world in embracing the new development and concentrating on how and when and what prerequisites we need to complete to be ready for the move. In my mind, we must immediately busy ourselves with the following. Firstly, moving to cryptocurrency must not be seen as just replacing one system for another. Rather, it should be dealt with as an opportunity to achieve the ambition of more socially favorable system. Unfortunately, Muslim countries are in the bottom of the list when it comes to inclusion. In some of our countries, no more than 40% of adults have a bank account. This is a problem, not only on the individual level, but also on social level, because it weakens the process of financial intermediation. Because money is representative of real assets, a weak financial intermediation means that the productive assets in the society are not fully utilized. Moving to crypto is a true opportunity to socialize banking to the fullest. This means that a higher rate of growth to the economy and a more equitable distribution of the fruits of this growth. The second point is, if we are to take advantage of the new development and avail ourselves of its benefits, we need to set up a compatible legal infrastructure. We all know that the core of business of Islamic banking from legalistic point of view is the contracts of sale and partnership. These contracts have terms and conditions derived from Sharia, including the crucial form of offer and acceptance and fulfilling Sharia requirements of full knowledge of the subject of the contract by both parties and other requirements relating to form of contracts. This is where Sharia scholars need to spend their time and energy in reinterpreting the jurisprudence of contracts in Sharia to fit the world where everything is done virtually. And the third point is the core system in most of our countries is yet to come to grips with the products and procedures of Islamic banking. Very few Sharia judges can really say they understand Islamic banking. The dispute resolution under a monetary system that is ruled by cryptocurrencies need a new breed of judges and a new legal procedures. The court system and the Sharia educational institutions must keep pace with this development, but it has to be done and done now, not later. And number 4, it is furthermore important that such development and accompanied by right policies to manage the process and the transition to a fully crypto system, especially vis-a-vis cybersecurity and the relevant security matters. The burden of this function is on governments. The private sector cannot alone take care of this part of the transition. So we urge the governments to now put attention to this job. In such a short time, this is what I can say. Thank you very much, Mr. Chairman.
Thank you so much, Dr. Al-Ghari. And I will move now to Mr. Mustafa, and let's build on this positive view of Dr. Al-Ghari regarding the cryptocurrency from an Islamic perspective, and elaborate us more on the benefits or the opportunities that cryptocurrency can bring to Islamic finance. Is there any opportunities that Islamic banks or Islamic financial institutions can see in such trend or technology?
Thank you, Rashid. Bismillah ar-Rahman ar-Rahim. Alhamdulillah Rabbil Alameen. Wassalatu wassalamu ala Sayyidina wa Nabiyyina Muhammad wa ala alihi wa sahbihi ajma'in. Thank you very much for the question, Rashid. And, Doctor, thank you, in particular to Sheikh and Dr. Muhammad Al-Ghari, who gave an excellent overview of the Sharia position on cryptocurrencies, leaving no doubt that, this is something that, is completely in line with Sharia within the rules that have been set for mediums of exchange, and something that the industry and regulators and others need to develop on to be able to enhance and improve the efficiency of financial intermediation. And I think just to add on that, as your question rightly says, there are a lot of opportunities. In fact, cryptocurrencies and the underlying technology that powers it, technology around distributed ledgers, blockchain, smart contracts, and other innovative solutions can really tackle and address some of the core and persistent problems that have existed within Islamic finance since the modern form of Islamic finance was launched back in the early 1970s, right? We have, Islamic finance was spearheaded as something that is a version of Islam, a version of financing intermediation that is more aligned with our values, that is more aligned with maqasid al-Sharia, or the principles of Sharia, and is something that can help address a key need that exists in Muslim markets, particularly around financial inclusion and increasing financial intermediation for those more disenfranchised fragments of society. Right now, this is a challenge that has continued to persist within Islamic finance. But what cryptocurrencies and their underlying technology offer is a technological tool to tackle many of these different issues. And if I start with, the basic product structuring, for example, right? Islamic finance, in theory, we always hear that it is a form of financing that is aligned with profit and loss sharing. But for those of us who are in the industry, we understand that there are a lot of challenges that exist when it comes to profit and loss sharing, right? There are challenges around transparency of funds. There are challenges around governance. There are challenges around performance from an economic output perspective. All of these issues and challenges can be addressed through blockchain. In fact, you can map out supply lines from the source raw materials all the way till the sale and beyond. So a lot of these issues, supply, trade finance challenges that exist, facilitating cross-border economic activity can be addressed through this issue. So one of the key things that technology offers is this capability to do product development that is more aligned with maqasid al-Sharia, particularly around elements of profit and loss sharing. The second thing which the Sheikh articulated was around improving the efficiency of financial intermediation and improving financial inclusion, right? And this has always been a key challenge in many markets where, where you live, what your economic status is, what your educational status is, determines how much access to the financial system you have. And what that essentially means is it's bad for the individuals that are excluded, but it's also bad for the broader economy, because the sources of capital are not able to reach the most optimal utilization of capital. And in that situation, you have a system that is inefficient. And one of the things that, this technology does, it really allows you to reframe how, people can participate in financial services, how they can be incorporated in financial services, and the impact that has on those communities. So definitely financial inclusion and efficiency in financial intermediation is another key benefit and opportunity that we see in this space. And then another key area is around governance, right? We've had this, persistent issue within the industry that, governance around, use of funds that are raised in a Sharia compliant manner, utilizing synthetic instruments to try to, mimic conventional transactions and so on. This is an issue that has persisted. And again, it's an issue that is derived because we have followed a very conventional form of operating our financial system and trying to fit it within a Sharia purview. So when you have tools and solutions like blockchain that can provide you governance across transactions that, don't stop the governance process when the actual sale takes place, but can carry through to see how those, cryptocurrencies, tokens, money, or whatever it is, has been utilized, where it has been utilized, what has been the outcome of that. Not only can you measure where the proceeds of those funds go, but you can also measure the impact, social impact, environmental impact of that activity. So that becomes another key opportunity that I think exists within the Islamic finance space that originates from this. And then lastly, another key challenge that we've tackled with industry for a long time, which is challenges around standardization, right? The emergence of smart contracts that can be built on decentralized ledgers that are accessible to all parties to a particular transaction or to all stakeholders to a particular transaction become very interesting to help push the standardization model, where you can get consensus across jurisdictions around how contracts should be structured and how they roll out. So these are just some of the opportunities that that originate from Islam, from the blockchain technology for the Islamic finance industry. And really, as was mentioned in the earlier sessions and in the keynote addresses this morning, the disruptive nature of this technology is going to be fundamental. And we can't, as Mr. Ayman said in the morning, we can't really picture what the world is going to look like when mass adoption of this technology takes place. But what we find in it are the tools that are required to tackle many of the limitations that had existed within the industry. And if we are able to utilize it correctly, we can significantly push the industry in a positive footing to meet many of the original objectives that they set out to address. Thank you.
Thank you, Mr. Mustafa, and especially for this structured listing of the opportunities. As you mentioned, financial inclusion is one of the opportunities that cryptocurrency bring to financial or to Islamic finance. And this is one of the points that we will cover later in this session. But before that, let's continue with the positive aspect of cryptocurrency. And let me ask Dr. Shakil Mohammed to highlight the benefits of introducing an asset-backed cryptocurrency ecosystem. Dr. Mohammed, the loud is yours.
Yeah, thank you so much, Rashid and other participants and ICD for giving us this opportunity to share our views about the cryptocurrency. I remember a few years back when we talk about cryptocurrency on the government sector or some other prestigious events like that, the people look at us with very strange views, and their sight was very totally different. I'm very happy to see very positive outlook and the positive remarks, especially Dr. Muhammad Al-Ghari gave very wonderful keynote about the Sharia law and the Sharia compliant cryptocurrencies. So the cryptocurrency, when I see cryptocurrency, even the asset back or without the asset backing, I see it more Islamic currency instead of just a cryptocurrency. I call it. There was one question I saw in the chat, what is the difference between digital currency or the cryptocurrency? So this is a very big debate in crypto space. So this is a digital currency that we are using different kind of signatures and techniques to, and that's why we are calling it crypto, and it's become a nomenclature to call it cryptocurrencies. However, why it is like more Islamic, more near to the Islamic financial instruments, because it is giving you the transparency. So let's talk first about the asset-based cryptocurrency. If we generally divide cryptocurrencies in two parts, we can say there are asset-based, not baked, but backed cryptocurrency and non-asset-backed cryptocurrency. When we talk about asset-backed, we can say fiat, we can say goods, and then we can say the intangible assets backed cryptocurrencies. And then there are some speculative or the meme coins such as like SHIB and those like Doge, and these are just experiments. Even though they are not very useful right now, they are creating some sort of bubble and repelling adoption to the larger community. However, these experiments also giving some useful data, how the adoption will roll out. When we see these asset-backed cryptocurrencies, there are not only like the goods and the fiat, there are these intangible assets. For example, your intellectual rights, your art, your rare collectibles, your licensings, all these are also assets. Even though these are intangible assets, but these are assets. So what are the benefits of these asset-backed cryptocurrencies right now? I can see these will be the first that will make sense to the legacy financial system, and the regulator will easily understand, okay, these are pegged to the fiat, whether to Saudi Riyal or Korean won or Pak rupees. So that will make very easy sense to the regulator. And these are the few currencies the regulators are giving them go ahead. However, we have to also think about the intangible assets, for example, intellectual right, as I earlier said. So if we categorize the benefits of these assets, it is giving us more transparency because of this immutability and seeing throughout the transaction. This transparency is one of the missing part in the legacy financial system. And if we see the technical benefit, for example, multi-party payment settlement or the payment settlements only, or the low transaction fees, these are some benefits that will help more Sharia compliant or the Sharia related or Islamic currencies. So I believe, as earlier I heard from Ms. Sandra Rowe and the other speakers, they talk about the CBDC. These recent coins, I call them not only the cryptocurrency, I call them the experiments. We are learning by doing the experiment. One is regulation. You are working within the regulatory space, and one is like in gray area. And this gray area, that is the innovative area where you can do more innovations. And then you, as we see how internet evolves, we are building infrastructure. On top of it, we are building applications. And this infrastructure, there was no regulatory space where we were playing. There was no level field for the regulatory. For example, I belong to Pakistan, I born there. And still we just got recently, like in 2019, we got privacy law for the internet. It took us 20 years to make some law related to internet. What we think about this disruptive technology, blockchain or the other innovative technology, definitely the regulator will take time. So I believe the asset-based crypto asset, for example, goods-based, oil-based, gold-based, silver-based, and the fiat-based, they will be the first regularized, and later on there will be the other type. Those are intangible assets. They will be also coming into the market. Yeah, thank you so much.
Thank you so much,
Over to you.
Dr. Mohammed. Thank you. Let us go back now to one of the benefits that Mr. Mustafa highlighted, and by that I mean financial inclusion. And my question will be addressed to Mr. Ali Shihan. Can you please talk about the use of cryptocurrency or how cryptocurrency can be used to address the problems of financial inclusion and for development purposes?
Assalamu alaikum. Firstly, I'm happy to be speaking here, and thank you for the beautiful speech from everyone, for the other speakers. So first, what can I say is the Sharia compliant cryptocurrencies the amount of cryptocurrencies are getting more and more in time, and when we are developing these technologies is to just bring the better future to Islamic finance, because as you know, with the centralized system, it was never fair to the Islamic countries. Like even when you use with SWIFT sendings transactions or other company sent transactions, the Islamic countries were always suffering from this transaction fee, or when they do the transaction holding there were. And with the cryptocurrencies and the blockchain technology, we have a solution for Islamic countries. It's the best part of it, to be honest. We are able to bring the freedom, financial freedom, to everyone in Islamic finance. So this is bringing us a big hope in the blockchain technology, in the cryptocurrency, in the Islamic finance. So, but while we are producing these cryptocurrencies, Islamic compliance cryptocurrencies, we should be careful about the cost efficiency. This is important because we are supporting Islamic finance, and the cost efficiency should be one of the most important, and the transaction speed too, because we are already suffering with this financial corruption in the system. So the transaction speed is one of the other one, and also it should give people to contact between the people. For even in Zimbabwe or in Nigeria, in Africa, it should be for everyone, not for European countries, not for America, not for Asia. It doesn't matter. It should be for everyone in the Islamic finance. So there are lots of benefits. For me, what I can say is for most Islamic countries, because even when I was in Uzbekistan this week, when I was doing some meetings with the people in Uzbekistan, and the banks and the funds, they were having worries about getting more capitalization, finding funds, finding liquidation. And with blockchain technology, we are having the chance of bringing new funds in the business and develop the leasing, financial leasing, financial renting. We can develop these parts of the centralized finance with decentralized system, decentralized finance. So my focus is mostly to DeFi, and while doing this DeFi, being watching the corners of the sharp corners of Islamic compliance, because when we mention about DeFi, we should also be careful about going not outside of the Islamic compliance, because it's possible. Because what most people are afraid is, we are hearing stories about money laundering, and this is real. This is another part, the ugly part of decentralized system. But with the right regulations, we are able to solve this system all together with the Islamic finance. We have this capacity, we have this ability. So what I'm saying is, in general, this centralized finance, centralized Islamic finance should focus a little bit more to decentralized system, because it will bring liquidity from whole world, new capital, and also new chances of finding the financial freedom between families, between making the business treatments in the system. I mean, it's going to help a lot the system. This is what I'm thinking in general.
Thank you, Mr. Ali. Thank you for your intervention. I think in this discussion, we've covered the positive aspect of using cryptocurrency or adopting cryptocurrencies, but there is one negative aspect that we cannot deny, which is sustainability. The use of cryptocurrencies, and especially the mining process, can bring a lot of questions related to energy consumption and sustainability issues. In your opinion, how can we benefit from adopting cryptocurrencies while mitigating the risks related to sustainability? Perhaps I will start with Mr. Mustafa.
Thank you, Rashid. And I think, that's a very important and very pertinent question that I think is on everybody's mind, is that how do you, while the technology is great, how do you do it in a sustainable manner that is not, too energy intensive or so on, right? And when you look at cryptocurrencies, essentially, you have two different types that you have to look at, right? One is the proof of work based currencies, and one is the proof of stake based currencies, right? And usually it is the proof of work ones that are the ones that are more energy intensive. The proof of stake ones are typically, sourced by or transactions are verified by pools of tokens that have been put together by the individual owners, and it's not as intrusive on the system, and they use sharding technology, which helps. But when you come to proof of work, there's no denying that it is very, very energy inefficient, right? I mean, if you look at something like Bitcoin, through the halving scheme, of a total, if I recall correctly, 21 million Bitcoin that are potentially available, in 10 years we were able to mine about 18 million, and it is projected that the next 3 million is going to take us 100 years to mine. Right, that is the level of disproportion that is there, and the energy and the power that is required to drive that is significant. We've seen, markets like China recently push out their crypto miners, and a key driving factor of that decision was energy concerns. And we know that there were areas in northern China in particular that were suffering from energy shortages. We know that in Russia and Kazakhstan, where energy supplies are subsidized, the governments are considering a tax on crypto miners to offset the additional cost that is incurred through there, right? What is very interesting is to see what is happening in El Salvador. And that was mentioned in the previous panel as well by one of the speakers, where they're using their geothermal energy production through a volcano to do the Bitcoin mining, right? And that is something where, utilizing renewable energy in an innovative manner to do the mining can help address some of the sustainability gap. But I think more broadly, what you're going to see is cryptocurrencies moving away from the proof of work model to a proof of stake model, because that is going to be more energy efficient and sustainable in the long run. Thank you.
Thank you, Mr. Mustafa. Perhaps now I will move to Dr. Shakil, if you can add on.
Yeah, thank you so much. So the blockchain have sustainability, scalability, and interoperability challenge. For the this scalability or the throughput challenges, somehow these are the technical challenges, and the interoperability is somehow also the technical challenge. And however, the sustainability is kind of that is also technical as well non-tech challenge. So for the Bitcoin, I can say, let's forget about the Bitcoin proof of work. We are moving, the entire cryptocurrency ecosystem is moving to proof of everything instead of proof of stake. For example, recently we were, I was advising some blockchain project. They were working on proof of elapsed time. There are different proof of authority. So I call it proof of everything, proof of even stake or whatever. So the sustainability not only is for the energy point of view, there is a governance challenge for the sustainability as well. So, and there is also decentralization challenge. For example, if we see Ethereum blockchain is moving toward the sustainability to the proof of work in ETH2. So how they are not becoming very centralized blockchain. So they put some cap, like only you can run your validator with the 32 ETH. So there shouldn't be a big validator service provider. Those run the validators, and the Ethereum can become kind of a centralized. Still, there is a chance in the proof of stake networks, the richest become rich and the poor become poorer. So this is one of the biggest challenge, and definitely this required a lot of effort, because we just see this is a elephant. I can say, like, the blockchain itself has many challenges. I said the technical challenges, but this sustainability, where we also, if we include the governance, if we include this other energy challenges, so I believe we need more efforts, we need more discussion, and I believe in very near future we're gonna have some better solution for the sustainability.
Thank you, Dr. Mohammed. Mr. Ali, can you add on, please, on this point?
As my colleague, friends said, the energy consumption, yeah, this is a big issue in the system, but I don't exactly see it so big negativity, because in centralized system, the energy consumption is 10 times more than decentralized system. I mean, it's a financial solution, it's a financial system. So if we are making this question, I agree to also making doing the rally between centralized system and the decentralized system. Yeah, Mr. Mustafa mentioned that right now, yeah, as he said, 18.5 million Bitcoins in the market, in the circulation right now, and 2 million left to get the mining. So in future, for me, the sustainability is gonna be like, because people are not going to get enough of Bitcoin in future, the system is gonna get slower, because the miners are gonna get, the amount of miners are gonna go down. So maybe in 15 years, it's gonna be like, for each transaction, it's gonna be 2 days or 1 day, who knows, but it's a possibility. So in this sustainability, I would rather to find some solution in the blockchain technologies. Yeah, it should be decentralized. Also, they have set some centralized strong servers to provide a better solution for the infinite time, because we are saying that when they launch the blockchain technology to space, you cannot take it back. It's going to be in the space for 100 years, 1,000 years. There is no more change. Like Mr. Shakil Mohammed mentioned, Ethereum right now, they are in project of Ethereum blockchain version 2 because they cannot change the past one. They cannot do any regulation from that one. So they have to launch a new one. So if we are launching it and if we cannot change it, so we need a solution which the transaction speed should be always the same that we can provide. Also, let's say not only mining, also there are some other solutions right now in search, like putting onto computers, on televisions, or radio machines to do this decentralized system more powerful. It's a possibility that is right now in development. So about sustainability, I am more proud of decentralized system than centralized system, because we start to be colonialized in years. Like we are planning to, Elon Musk is saying in between 2040 and 60, we are going to send 4 million people to Mars. So how am I going to send money to my mother by World Central Bank? No, it's not going to work. So it should be something decentralized, because we start to be colonialized. So this is my view about this topic. I don't see that much negativity about the sustainability.
Yeah, so I will add one more sentence. That is one of my famous sentence, are very popular in my mind all the time. They took our content, don't let them take our money. Who took our content? The big tech giants. So this decentralization for the sustainability, for the governance, let's build that kind of governance system where the big giants or the richer cannot take our money. So we can have a transparent system. Yeah. Thank you.
Thank you so much. Yeah.
Can I add one more thing?
Yeah, of course.
It's sad that people right now see blockchain technology as only currencies. the blockchain technology provides much more value on the system, in the governmental issues too. Even in this year, the United States were talking about in the voting, there was some cheatings, you know. With blockchain technology, with just a QR code, you can do your votings that can never be changed in the system. With a one QR code, your ID information, your health insurance, your passport, your bank accounts, your everything can be in the system with a single QR code that cannot be changed, that cannot be copied. So fake IDs, fake passports, stealing in my cars and stuff, the paperwork, these all can be done with a blockchain system. So what I'm thinking is, if I will be a government, I can afraid from this blockchain system. This is the truth. And is it Islamic in the best way? Is the best Islamic way for me? Yes, definitely, because everything is open, nothing anonymous, everyone can see the system with the blockchain technology. So it's, for me, from my heart, I can say, as an Islamic person, yeah, this is Islamic way of finance.
Thank you so much. Thank you for all your shared views and thoughts. This was a very insightful session, and we still have time to ask a few questions from the audience. I will pick some questions, and I will start with this one regarding the use of blockchain. Are we facing a new Islamic banking industry because of the blockchain technology? If anyone wants to jump in, and yeah, Mr. Mustafa.
Sure. I would not say that we're facing a new Islamic finance industry, but what we're doing is we are, if you like, maturing towards what Islamic finance originally was intended to be, right? The theory of Islamic finance that we read and the motivation that drove the pioneers of this industry to start Islamic finance, to detach from conventional finance, to detach from a interest-based system, a highly speculative, highly derivatives aligned system, towards something that would align with maqasid al-Sharia, the principles of Sharia. That is something that we've not been able to achieve, right? Islamic finance everywhere currently does have its shortcoming, and one of those shortcomings is not being able to have the technology or the systems to be able to implement the true value of that, right? And I think this is something where we will see the industry change. So 20 years from now, the Islamic banks that embrace this technology will be around, and they will look completely different. The roles will be different. Their power will be less within the financial system. It will be more decentralized, but those that are offering services and value will still play a key role there. And the ones that don't adopt, that continue to stay in the same way, will be sidelined and ultimately be left out. That's my view.
So I will jump in here. The disruption of blockchain, that will bring new sort of services, new sort of applications, definitely, that's for sure. And when we call it like Islamic or Sharia compliant currency, we have to educate not to the Islamic, the Muslims, but also to the other population. What is the meaning of Sharia compliance? Because the only Sharia word become somehow different meaning. So if we see the Sharia compliance finances, I love one sentence of Dr. Umar Fisher, the Islamic financial scholar. He called it clean financial system, not debt-based financial system. Few days ago, I was talking to one of my friends in Australia, and he was discussing one application like Pay Later. He said, this is very popular in Australia, so why don't you introduce in your application that kind of Pay Later? So make slaves, debt slaves. So the majority of the capitalist country in the world, almost like majority in the world, are like debt-based slave. So the financial literacy, as Ms. Sandra Rowe said, that is very, very important, not only for the blockchain industry or in the crypto era, because in the generation Z, the upcoming generation, the finances will be that fluid. We don't understand whether we are sending message, whether we are sending money, where we need that kind of financial literacy to our upcoming generation. Right now, we understand, okay, what is happening, where is manipulation, and where is the real value. But the native to the digital world, they might not understand the importance of currencies, as well as the financial, when we call like the Sharia compliance, we have to also educate. So recently we are developing one financial literacy platform with the ICD. That financial literacy platform will not be having webinar, hackathon, extra. It will be also having token launch. And we also developed, that has been done, AI-based chat. If you want to ask some questions related to Sharia terminologies, or the legacy financial system, or the crypto. So right now we have done with the Islamic as well as with the legacy system. We are working on the database of the crypto terminologies. So I believe the financial literacy, as our earlier panel said, that is one of the key factors. We have to educate, we have to become learning machine. The leaders of the financial industry have to become learning machine, as well as to share their views with other. So that will help us for more adoption, and that will help us for more transparent systems. Thank you.
Thank you, Dr. Mohammed. There's one question here related to the energy issue. An anonymous attendee is asking, proof of work is more energy intensive compared to proof of stake because of the calculation difficulties for mining. And it is also a feature that helps to secure the network. This is a good aspect, with unfortunately a negative aspect on energy efficiency. How much more secure is proof of stake compared with proof of work?
So if I will go for that, it's a technical side, so I will go there. Proof of stake is as secure as proof of work. There is only one challenge, that is decentralization. Because when, for example, if we see there is one popular blockchain called Cosmos, I'm very much advocate of that. There's a Polkadot, there is then Ethereum. These are like very well-known proof of stake blockchain. If we see Polkadot, it is somehow very centralized. Cosmos is very centralized. Ethereum tried to be decentralized. Otherwise, if they are more decentralized, for example, Ethereum is thinking for the quadratic voting, Vitalik said about the quadratic voting, and we bring that quadratic voting to the Cosmos ecosystem and build some modules for the Cosmos blockchain. Like any blockchain that want to build on the Cosmos ecosystem, they can use that quadratic voting for the governance. So I believe the security at both sides are very much fine. There is no challenge, even in the quantum era. I am attending recently one CDL Toronto stream for the blockchain, and where we have a quantum entrepreneurs at one side, and where another side is the blockchain entrepreneurs. So even in the quantum era, we have geometric algorithm that can help us to protect in terms of securities. But the security is not a challenge. As I said, the centralization and the decentralization, the richer get more richer, the poor become more poor, because the richer have money, they can run more validator. That is the bigger challenge. Thank you.
There is here another question from one of the participants. The question says, for money, it is being abused. Extensive infinite money creation is creating huge debt and further leverage on wealth equality. Also, infinite money versus a finite planet's resources drives excess consumption and is against sustainability. So this is a question, is this against sustainability? So he's asking, what is the Sharia view on extensive fiat money printing? Is it good for society? Is it halal? Bitcoin has a deliberate limited supply. Is this better? I think there is a Sharia aspect in this question, and we lost Dr. El-Bari, but if anyone from the speakers would like to add on this.
Sure, I can possibly jump in. I mean, obviously I have to give the disclaimer, I'm not a scholar or even close to being a scholar, but I have an understanding of Sharia acceptability within the industry, right? So as you mentioned, the issue with fiat currencies and with constant printing while resources are limited or even dwindling, poses a fundamental challenge to the financial system, right? In creating imbalances in that system. Now, when you add on to that the availability of debt, that creates even more imbalance, right? So while I'm not aware of any strict Sharia rules that are that limit printing of fiat currencies when while it is transparent to all stakeholders that is happening in the background, right? You can't communicate to the market that this is the fiat currency will not grow exponentially, but then in the back you're printing more. That could raise issues, but while it has been clearly communicated, it doesn't create a direct Sharia issue. What it does do, it does create systemic imbalances within the financial system, right? And it is the responsibility of the regulators ultimately to look after the financial stability. And I think, Dr. Al-Giri gave that example, that the second Khalif, Umar radiallahu anha, when he was considering that, he was considering the broader when he was considering camel hide as being utilized for currencies, he was looking at the broader macroeconomic implications of his decision, right? Camels were used for transportation, they were used for food, they were used for a split of services, and the impact that would have on the economy was a key deciding factor there. So I think that is a consideration that has to be looked at. Now, separate to that, the concept of fractional lending is a completely different matter, right? So fractional lending is not simply printing more money, but utilizing and exponentially leveraging deposits that are placed in the system. So that creates a different barrier. The Sharia verdict on that, I'm not aware of. I know that there is disagreement there. It is a highly technical matter. So simply printing additional fiat currency, while it may not have any direct Sharia implication, fractional reserve lending is something that has had a lot of technical Sharia discussion around, and I'm not in a position to comment on the ruling, but it's something that becomes highly technical and has inbuilt in itself inherent Sharia issues or Sharia considerations.
Thank you, Dr. Mustafa. Dr. Shakil, you want to add on this point?
Yeah, sure. For Sharia, I'm not expert on Sharia, but when I see Islamic finances, as I earlier said, I don't only call it a cryptocurrencies, I call it Islamic currencies. And the Islamic currencies, if we see the whole concept of the religion pushing toward the financial ecosystem, that was a liberation, not making you a slave, not making you in debt-based economy where everybody is a slave to somebody. You have to pay for your house to somebody. You have to pay for something that you took some leverages. So printing money somehow is create deflations. It's create a lot of challenges without any real value creation. Printing just money for the need of money, that is kind of I see is not clean money. I don't see it very transparent way. But for example, if we see in blockchain or in the cryptocurrencies, there are deflationary coins. For example, Ethereum does not have like some limits. There is some reason for that. We do not have a limit. We are minting coin after every block confirmation. There is reason for this. For some incentive, we want to incentivize our system for the protection, for the security. In that case, like increasing the circulating supply, because does matter, because you are creating value. But without creation value, you just print like US dollar we recently printed by the government, or other currency printed, fiat currency printed by their governments, respective governments. without real value creation. Most of the time during COVID, we were sitting at home. Most of our working places were closed, and we were not creating wealth. What is the wealth? We work and we create wealth and we create value. And in response to that creation of wealth and the money, we print some fiat. So without that, I feel it's not only un-Islamic, and it is, I don't know what it is.
Thank you, Dr.
I'm sure it is unethical.
Thank you, Doctor. If there is anything that Mr. Ali, you would like to add, if not,
I can only put like, I mean, after 1971, the gold was behind of dollar. And for each dollar, there was gold. But after 1971, they stopped it. So as Mr. Mustafa and Mr. Shakir Mohammed mentioned, right now the printing money is just for good of something, and which I also don't see so legal, because I don't have this money in my pocket when they print it, and I don't know who is having it and who are the shareholders. So it's not on my benefit. Even my money is losing value because of inflation with their movements and printings. But for cryptocurrency, I mean, it's like, while every year we are printing money, people are talking about the price of Bitcoin and stuff. So for me, if I see in this way, the printing money is infinite and the value of amount of Bitcoin is stable, Bitcoin is so cheap for now. I mean, I'm not saying everything is cheap, because there are some tokens which has no limited amount, which is also, I don't see that much logic. Of course, if there is strategy behind of it, I can agree. I can understand the finance strategy behind of it. But for that, if something is not limited, it has no value for me. It's like, this is also what I think about the printing money and without limit products. This is what I'm thinking in general.
Thank you so much. And thank you to all the speakers in the first session and the second session. It was both very insightful sessions, and we tried to cover many aspects of the topic. And I'm sure that the participants share the same view with me. And now I will pass on to my colleague, Dr. Mohammed, to close the sessions.
Thank you, Brother Rashid, and special thanks to our distinguished speakers from both sessions for sharing their knowledge, ideas, and for this interactive and very interesting discussion on the topic. Ladies and gentlemen, we have now come to the end of today's webinar. CBAFI and ICD would like to say thank you to all of you for your active participation in this webinar. We would also like to take this opportunity to remind you to take a few minutes of your time to complete the feedback form that will be sent to you by email. Your valuable inputs and comments will help us improve our events in the future. Ladies and gentlemen, again, on behalf of CBAFI and ICD, we thank you all, and we look forward to seeing you again in our future events. Thank you once again, and have a good evening ahead. Stay safe. Assalamu alaikum wa rahmatullahi wa barakatuh.